Happy 2026, everyone. Welcome to the very first Carson's Take 5 of the year with Ryan and Sonu. Sonu, it's 2026. Looks like you're working on your tan. Where are you?
It's a good start to the year. Happy New Year, everyone. Happy New Year, Ryan.
Same to you.
Yeah, I'm in Naples, Florida, after spending a week in India. Here I am. And trying to make the most of it before I get back to, mind-numbingly cold Chicago.
Oh, it's been some wild weather all over the place, much like the market in 2025. And this week's Carson's Take 5, we're going to talk about lessons learned in 2025. So, I'll start. We'll just kind of have fun bouncing around here. I think what shocked me about last year, that everyone was surprised when we had volatility, right? We had the near bear market in April. Then we had a big rally. Then we had about a 5% mild pullback in November. This is normal. Every single year, Sonu will have scary headlines. Every single year is going to have volatility and pullbacks. And it's like it happened last year and everyone just went crazy. Now, we talked on this very weekly video series that, listen, this is part of the process, right? Volatility is the toll we pay to invest. I think we called that literally a title to one of these we did a few months ago, and it was very highly watched and listened to, or watched and downloaded. So to me, volatility is normal, and it shocked me people didn't learn from that. So for next year, let's get ready. It's going to be volatile again. We still think it's bullish. We're going to talk about our outlook very, very soon, not this week yet. But what are some things that kind of surprised you or you learned from last year that we can take into 2026?
What's that saying? You always say, plans are useless. Planning is everything.
There you go. President Eisenhower. Let's give him credit. Yes.
Yeah. So I think it's important to stick to the plan, right? But at the same time, this year is a reminder of sometimes the facts on the ground change.
Yeah.
And, you change your mind about the outlook or how it is, right? Now, the worst time to possibly change your mind about these things is when markets are down, for example, 18, 19%.
Yes.
Because that gets to the fact that, yes, if you avoid, for example, the 10 best days, right? That can really ding your overall market returns, right? What you expect from your portfolio. But here's the thing. Usually the worst days are right before the best days.
Yes.
Right. And that's usually what happens. I mean, just the way our brains work is like, markets go down. The world is ending. We got to sell. And guess what? The next day there's a turnaround. That literally happened in April this year. I think it was a lesson for all of us, not just, other investors, including you and me, that, you need to have a plan in place. Right. And now what was the plan for us? I mean, we came into the year positive on equities. Right. We expected some volatility. But my biggest, Liberation Day was a surprise and all of that. I think it was a shock to everyone, everything around the tariff issue. But perhaps it shouldn't be a surprise. My biggest thing what underlined this whole year for me was the fact that how resilient American companies are.
Yeah.
Right. If you think of the S&P 500, it's close to a 20% return. Third consecutive year of something returns near or above 20%. And a lot of that has come from profit growth, right? And if you think of profit growth, where does it come from? Sales plus margin expansion. Sales, obviously, GDP growth is clocking in around trend now, so that's positive. But margin expansion is coming about because companies have adapted well to tariffs. Right. I think the administration threw everything at the companies. Let's see if we can handle this. And guess what? I think American companies kind of said, yeah, we can handle it.
Well said. That's a great lesson learned last year. And as we move into 2026, follow the profits, follow profit margins, follow what corporate America has to say. Those are some great timeless lessons. I'm trying to think here, another one that gets me, and a great lesson, a reminder from last year, and then one to think about in 2026. The crowd sometimes is wrong, right? If everybody's thinking alike, somebody isn't thinking. Another favorite quote of mine from General Patton. Back in April, we were told repeatedly, if you turn on the TV, how bad everything was going to be, how tariffs are going to cause a recession. We had a near bear market. It was going to only get worse. Then the market started to rally in late April into May, and we're in the midst of a 7-month win streak. Assuming we're higher in December, it'll be 8 months in a row. And I think it's important to, again, what the market doesn't care about our feelings. The market doesn't care about what's happening right now. The market cares about what is priced in and what isn't priced in. So all this extremely bad stuff was priced in April. And then we avoided the comment and we had better news. And we had, again, the tariff's like a dial. It was on a 10. It was turned back down, turn the dial down. But I think that's so important. I will share this chart now. I didn't think I would, but I'm going to. It's from our friends at Yahoo, Sonu. And it shows all the market strategists. They were bullish at the start of the year. And as you can see on the screen right now, then
almost everyone, right?
They all cut their targets in April. And then the market starts rallying. And take a wild guess. By August, that's where this chart ends on August, they all start upping their targets again. So yes, I'm a market strategist. Sonu, you're a strategist. We have to give targets to a degree. I'm not a fan of that. We are net bullish still on the economy and the stock market. But I think that's important to remember. There is no one that's flawless at this game. That we've made mistakes. I put us up against anybody else the last 3 years, what the Carson Group has said. And if you listen to these weekly videos, you know that for the most part we've been more right than most. But trust me, we've been wrong places. We're going to be wrong again. So there is no one infallible. There's no one perfect out there. Just know that. So again, following your plan, sticking to your plan can really help you versus turning on TV and see whatever the latest talking head is telling you on there. Sonu, we've probably gone about long enough. Anything else quickly that you learned last year or we should discuss looking in the next year?
It's more of a reminder to look at the totality of data as opposed to getting sucked in on, oh my God, this indicator is falling off, right? That means you're going to have a recession. Or that indicator is doing something else, and that means something really terrible is going to happen. No, I mean, this year was a lesson in that follow totality of data and the message of the markets. Back in April and May, the markets sniffed out that, maybe tariffs are going to be pulled back and things will be okay.
Yes, and they were. It was a great year for equity investors around the globe. Gold did really well. A lot of commodities did really well. Bonds had their best year since 2020. Hey, what is in store for next year? You know what you're going to have to do? You have to wait one more week because next week on the Take 5, we're going to give our outlook for 2026. All in all, a little spoiler alert. We think it'll still be pretty good. Everybody, thank you so much for listening to the latest Carson's Take 5 on lessons learned from 2025. Stay tuned next week for Outlook. We'll see you then. Take care.